Hello everyone, welcome to another episode of my video. In today's video, you're going to learn how to spot SMC traps in the market, or the institutional traps in the market. So, are you struggling to identify SMC traps like inducement, liquidity grabs? So in this video, I'll break down this critical concepts step by step for you, so you can understand how smart money operates and how to avoid falling into all these common trading traps in the market. Whether you're a forex trader, stock investors, or crypto enthusiasts, mastering this SMC concept will give you the edge you need to trade smarter and more confident. So make sure you watch this video to the end. Make sure you subscribe to this channel, turn on the notification icon so you'll be among the first set of people to be notified each time I drop more content like this. Previously, in my previous video, I explained everything about the trend, the basic and the major trend in the market. And as you can see on the screen, like I said previously, when price creating series of highs and low in the market, this signifies uptrend in the market. And when price creating lower highs and lower low, lower highs and lower low, lower highs, lower low, this signifies bearish move in the market, which is downtrend. And like I said previously, anytime price is just creating this kind of move in the market, this doesn't mean we are having a break of structure. No, this is not a break of structure. Like I said, if you haven't watched my previous video, go and watch now so you can understand all these concepts. So anytime we have price breaking lows or breaking lows or breaking highs in the market, this signifies these are inducement. These are the institutions inducing people to sell in the market, because without a move, or let me say without a bearish move or a bullish move in the market, the retail traders won't take any decisions. So the retail traders are waiting for the market to push to a certain direction before they can take a step. So anytime they see price ranging to the downside or trending to the downside, so that's when they decide to take action in the market to execute to execute their trade. So now once they execute that trade, this is when the smart money are waiting for them to grab their liquidity, because they know immediately they push price to a certain direction, the retail traders will jump in and start trading, and this is when they push price back to grab all the liquidity. This is what we call the liquidity grab. Why is it a liquidity grab? Because in these highs and lows, there are liquidity sitting above each high and low in the market, which is stop loss. So there are liquidity sitting above all these high and lows in the market, and immediately the institution push price back, they grab all the liquidity sitting here, they grab all the money, all the retail stops that we have here, they grab all the money and later push price back to where they want price to go. So that's the simple definition. I hope you understand. Look at this first example we have here. Price creating series of lows, high, low, high, low, high. So this tells us we're in a downtrend in the market. And now the next thing, you see what happens. So immediately price break this low, we have this level becomes our inducement. Now, and price continue to downside and create another high and break this previous low again, creating new highs and low. So our inducement shifts from this point to this point. Now here becomes our new inducement point. So and price pull back from this point, went up as if price wants to grab liquidity, and sometimes you can even get up onto this point and create something like double top here in the market, because we have thousands of strategies in the market, and we have some retail traders who use pattern to trade. So anytime they see double top in the market, they buy, they sell. Anytime they see double top in the market, they sell, or triple top. And anytime they see double bottom in the market, they buy, or triple bottom, or they call it the head and shoulder pattern, wherever it is. So they trick people to sell at this point, even without grabbing the liquidity here. So as you can see here, they'll push price to this point, and start pushing price back to the downside. So without grabbing any liquidity, and immediately the retail traders see this, they will start selling the market. They will start selling. So they will feel like, wow, this is a double top. And immediately they start selling. At some point here, the institution will push price back and grab all their liquidity, because those retail traders that sell here, that sold from this point, all their stop loss will be at this high, at this previous high. So all their stop loss will be sitting here. So that's why they push price back to grab all the liquidity sitting here, and now they push price back to the downside to break this low, because immediately price grab liquidity from this point, this low becomes a major low here, and now immediately we have a break here, and this low we have a valid break of structure, as we all know. So I hope you understand, and if you have any question, just write down in the comment section. And before we move to the next example, let me just add more on explanation to this. And sometimes you see when price creates in this kind of situation in the market, sometimes you see price even after grabbing the liquidity we have here. Sometimes this happens most of the time in the market. You see price going down a little bit and go back up to grab this high one more time before going low, or even up to 3 times, and you see price pushing up to sweep this high one more time before going low to the downside. Now this also happens in the market. Even if you are using the smart money strategy and you don't have maybe the complete guide on how to analyze the market and how to execute your trade, so it's either you grab liquidity or you beat the liquidity, because some traders will think immediately price has taken out this high, so let's start selling at this point, because the institution know that some people will know that they have grabbed liquidity here. So, and some people will start selling because they know some people will start selling immediately price started reversing after grabbing this high. So they will push price back a little bit, and why those people that are selling here without a confirmation, because there's more to the entering strategies at this point. So without a confirmation, some people will start selling and they push the price back to grab the liquidity here one more time, and before pushing price back to the downside. So as you can see here, we have price trends on the downside as well. Went down, went up to grab liquidity above here. We have price grabbing liquidity at this point. So price grabbed the liquidity here. So immediately price grabbed the liquidity at this point. Price went down. So failed to break this low, the first attempt, and went back up, and later went down to break this low. And this becomes what? This becomes our break of structure. So immediately price break the structure. So where is our inducement? Some people will say here and some people will say here. So if you say here, you're right. This high becomes our inducement because this is the most recent high price creates before breaking this structure, as you can see. So this high becomes our inducement, unlike the previous example that I explained, as you can see, because all these moves here, they are all internal moves. They are all internal, as you can see. But here it's different. Price pull back at this point to break to grab liquidity at this point. So this point becomes a major low, and price went down, pull back a little bit and break this structure, and this point becomes, so this is our major low and this is our major high. So in this point in the market, this is not an internal move anymore. This is a major move in the market. Let me just show us a bullish example, or let me just invert the scale. So as you can see here, so same thing applies to an uptrend market. So as a smart money trader, you wait for price to grab liquidity before you take any decisions in the market. Even if you are trading, maybe you are trading on the higher time frames or lower time frames, whatever the kind of trader you are. So in as much you are using this kind of strategy, at this point price went up, pull back, break this previous high, and went back again. So you wait for price to grab the previous high, the previous low in the uptrending market, and grab the liquidity in the uptrend market before you take any trade decisions. This becomes our inducement point. Immediate price break this high, so this low becomes our inducement point, and price went down to grab the inducement here, pull back to the upside. Immediately we have a break here. This recent low becomes what? Because our inducement. So in uptrend, the most recent low becomes your inducement, and in downtrend, the most recent high becomes your inducement. So I hope you understand the difference between these two. Look at this next example we have here. As you can see, so as price trend to the downside, breaking previous low, you wait. As a smart money trader, you wait for price to grab inducement before you take any trade decision. So now immediate price break this low, this becomes our inducement point, and price pull back up, showing from the range a little bit here, and break this low. So our inducement point will shift from here to here. Immediately price break this low. And why? Because this is the highest point we have before price break this low. Immediately price break this low, this high becomes our new inducement point. Our inducement shift from here to here, and you wait patiently for price to grab inducement before you take your trading decisions. And now let's say price pull back up here, grab liquidity from here. So this is when you start looking for trading opportunity in the market. Immediately price grab liquidity, this is when you start looking for trading opportunity in the market. And sometimes price will even go more further to the upside to mitigate. Maybe there is a POI, we might have a POI here, and sometimes price will grab liquidity immediately and drop because liquidity fears market. And then immediately price break this low, then we have our break of structure here. So this becomes our break of structure. And sometimes even price sometimes might went up like this to grab maybe this first high here, even in a major move, in a minor move like this, in a minor move, or let me say in the internal structure, price can went up to grab this first high without grabbing the major inducement, because this inducement here is internal inducement, not the major one. Here is the major inducement we have, and price can leave this major inducement sometimes in market and grab the minor inducement and went down. It happens. And even sometimes in the market, price might grab this minor inducement sometimes and fail to break this low, and price would do something like this, went back to the upside, first pull back as if price wants to continue, and went back to later grab this major inducement and before breaking back to the downside. So this too happens in the market. If you look here, you see price pull back to the downside, just trend to the downside, break this low, and price went up to took out this the inducement we have here, because immediately price break this low, this level becomes our inducement. This level becomes our inducement, and price went on to grab liquidity we have here, and now went down to break this low. So immediately price break this low here. So where we say our inducement is, so our inducement is right here. Our inducement is right here. This first pullback we have, before the break of this structure. The reason why is because this structure is a major structure, not an internal structure, because you can see this low pullback to grab liquidity here, sweep this inducement here to grab the liquidity here, and later on this move break this structure. So this becomes a major structure in the market. I hope you can see the difference. This pullback here doesn't grab any liquidity. We don't have any liquidity grab here. We don't have any inducement sweep here. So this is our just normal internal move in the market. This first recent pullback we have here becomes our inducement compared to this previous one. I hope you understand. If you have any question, you can just ask me in the comment section. So as you can see, so that's the difference we have here. So an immediate price pullback to grab our inducement here. So this is when we start looking for trading opportunity in the market. And sometimes price can even went down a little bit, go back to mitigate our supply level or demand level in the market, which is our POI, our point of interest, to mitigate our POI in the market before trading to the downside. So that's the reason why you need to wait for the confirmations, the entry confirmations, before taking your trading decisions. So I want to show us a real chart example. As you can see, this is EURUSD chart on the 4-hour time frame. So if you look at the trend here, you see that we are in a downtrend in the market. So we have price creating series of lows and highs, lower highs and lower lows, lower highs and lower lows in the market. So see this signifies a bearish move. Let's push price back so I can show us an example. Let's push price back to somewhere around here. Yeah. And let's go to lower time frames, maybe like 15 minutes. So let's just play price forward from this point. Let's see what's happening in the market. As you can see, this is a low, a point where price retraces from, pull back to grab this high. As you can see, we have a pullback from this point. Price went down here, pull back a little bit, went down again, and we have our inducement point here. We have liquidity sweep here, and what happened? We all know immediately we have a liquidity grab. This point becomes our major low. So now let's play price forward. Pricing will continue going high. The more price continue. As you can see, price even went up more. Make an attempt here to break this low, but price failed. We have this low here. And let's continue price. Now you see what happened here. Now we have a break of structure here. So now immediately we have a break of structure. Let's say this high becomes our major high. Now let's play price forward. Good. So now we have price continue to the downside. So we have price pull back from this point. Immediately we have a break of structure here. Price pull back from this point and break this low. So now this low becomes our inducement. But before this break, you see that we don't have let's say we don't have any major pullback here. Aside from this major high, before this break of structure, we don't have any pullback here. So we don't have any point of inducement aside from this major high. And sometimes price went up to grab external liquidity, because we have two types of liquidity. We have major and which are the external liquidity, and we have the minor, or let me say the micro, which is the internal liquidity. So sometimes price grab external liquidity or internal liquidity market, but immediately price create a new high here, pull back from this point and break this low. This point becomes our inducement. So now what are you going to do? Immediately you see this kind of situation in the market. Let me say immediately you have this kind of situation in the market. As a smart money trader, you're going to wait for price to take out inducement. You won't take any trading decisions without liquidity being grabbed in the market, because if you don't wait for price to grab liquidity, it's either you beat the liquidity or you also grab liquidity, or you beat the liquidity. So this is the reason why you need to wait. You're going to wait for price to grab liquidity in the market before you take any trading decisions. So now let's push price forward. So you see here, price went to this high as if price wants to break and push down a little bit, and some traders can even start selling here. So now let's see. Nice one. So now you see, so immediately price grab this liquidity sitting above this level, then we start looking for trading opportunities in the market. There are more to the trade entry strategy, so there are more to it. So now let's play price to continue the downside. So we don't have any confirmation here, because you can see the price is not giving us a momentum or a momentum shift. We need a momentum candle to enter the price. As you can see, if some retail traders, if you have taken a trading decision and start selling at this point, price can even retrace without a confirmation. Price can retrace here to grab the liquidity here again. So and hit your stops, then you become the liquidity. You see, price went up one more time to sweep this high one more time, and let's see what happens next. Now we have a momentum shift in the market. Now let's enter and sell from this point. And as you can see, we have a previous POI here, which is the extreme POI we have here, that we can also sell from if price reach this point. So this is like a supply level in the market that we can also sell from if price reach this point. But because we have our confirmation here, this is why I enter the trade here. And also sometimes You can also sell from order flow in the market. And where is our order flow here? At this point, let me just say from your internal order flow or external order flow, but because price has even reached here already, price is at our external order flow. So if you want to look at the next order flow we have here, so this is our next order flow from this point to this high, and price has already reached our order flow, so we are not making use of order flow anymore. So now we are making use of maybe our entry strategy, or when price gets to our POI. But we already have a confirmation here, so this is the reason why I said from this point, based on the momentum shift in the market. Now, where will be our target? This low will be our target. So now let's play price forward to see what happens next. So you see, price continues to the downside. And now we have our TP8. Remember, this low sweep previous inducement, grabbing liquidity. This low grabs liquidity at this point. So this low becomes our major low. And later we have a break now. Then this high becomes our what? Our major high. So now let's continue and place price forward. And sometimes, even if you want to maybe to increase your risk to reward in market, you can use your Fibonacci to set your next target even after your 100% level. So you can take your Fibonacci from this point, from this low to this high, to set your next target even after your 100% profit target, to extend your TP. So you can target up to your 1.618 in the market. And sometimes, based on the market conditions, sometimes you can be able to secure a profit to this point, which is the 1.27, or even up to your 1.618, so which is your max point. Sometimes I would trade to, so this point, the 1.618. Now let's play price further. Let's take out this. Now let's play price forward. So immediately we have a break of this low. Immediately we have a break of structure here. I'll just liberate this. As you can see, we have a pullback here before this break. So this high becomes our inducement point in the market. Now the reason why is because immediately after the break of structure we have here, this high is the most recent high we have, not this one, because this high is the most recent high we have to this move immediately after the break of structure here. So this high is the most recent high, so this becomes our inducement point. Now let's play price forward. So price pullback, continue. So let's see, do we have a break of low here? No. As you can see, we have price pull back from this point, went down a little bit and failed to break this low. As you can see, if you look very well, look closely. If you look closely, you see that price failed to break this low. Because if price break this low, then our inducement will shift from here to here. But price failed to break this low and create what here? We have what we call the equal lows in the market. Now, even some retail traders that are trading the pattern strategy, they believe anytime price creates equal lows like this in the market, then they do what? They start buying. So immediately they see this pattern in the market, they start buying from this point. And even some even trade maybe double, triple bottom, or head and shoulder pattern, so on and so like that. So they even start buying at this point. Now we have what we call the equal lows here. So we have equal lows at this point. So our inducement, our major inducement point is still here, because we don't have any break of low here. So this is just double bottom in the market, and this double bottom becomes a liquidity area, because all the retail traders will start buying at this point. The pattern traders, they will start buying at this point, and this high becomes our one. So immediately we have equal lows at this point, and price failed to break this low. This high becomes our internal inducement point. So this point becomes our internal liquidity point, and this is our major inducement. But this low is our internal, because this high failed to break this low. So because price failed to break this low, then this high becomes our internal inducement point, and this is our major inducement point, remember. But if we have a break of this low, then our inducement will shift from here. Our major inducement point will shift from here to this lower high. Now let's place price forward, and remember, some retail trader will start buying at this point because they see what we call the double bottom. This is what we call the double bottom in the market. So some retail traders will start buying at this point. They will start buying, and all their stops will be here. They will start buying at this point. Let's play price forward. As you can see now, price grabs the liquidity we have here. So now, immediately price sweep our internal inducement, we can start looking for trading opportunities. Now let's see what happens next. Now you see price dropping a little bit to the downside, but we don't have a momentum shift yet. Now let's wait. See price moving up. Wow. So now we have momentum candle shift here. As you can see, immediately we have this momentum candle shift. You enter the trade and you set your stops at this top here. Now you set your target. So your target can be here, the 100% level, or you can use the Fibonacci retracement like I said the other time. You plot it from here to here and you set your target to 1.618. Let me draw it down. So now let's take it out. So now let's play price forward and see what happens next. So as you can see, I said previously that the retail traders that use the pattern trust strategy, all their stops will be sitting here. Those people who are buying at this point, all their stops will be sitting here. Now let's see what happens. As you can see, price drops to the downside, went up again, and now we have price reversing again. Now wow. So price break now price break this low, this point. As you can see, price has grabbed all the retail trader stops we have here. So price grab all the liquidity here. So immediately price break this low, price hit our TP, immediately price break this low, then this high becomes what? So our major inducement we have here shifts from this point to this point. Remember, this is not a major inducement, this is just an internal inducement. The reason why is that we have equal lows here, and this low failed to break this low point. If you zoom in very well and you see that this low failed to break this low. So this is the reason why. So create something like equal lows. So this is the reason why this high is just an internal inducement point. This is not a major inducement point. So immediately we have this break, then this high becomes what? So this high becomes our major inducement point. So I don't want you to make mistakes. So price already grabs the liquidity here, sitting at this top. Let's just take this out, and price break this low. Let's take this out. So now let's place price forward and see what happens. Now you see price continue to the downside, fail to take out this inducement, and price continue to the downside. So our inducement shifts from this point to this point. We have a pullback here at this point. So our inducement shifted from this point to this point. So now price continue more and more to the downside. And if you look here from this previous major point, I said previously that we have a supply level here that price failed to mitigate before going down, that we have here. So sometimes price might leave it to future times to later mitigate, because remember I said in my videos that price doesn't follow one single time frames. Price does not follow one single time frames. So your major level on the 15-minute level might be a 4-hour inducement level. So these are previous supply level that price failed to mitigate before breaking this low. And even here we have another supply level here that price failed to mitigate. So let's plot these two. Now look here, this point we have another supply level here that price failed to mitigate. So now let's play price forward and continue the price action. As you can see, price even continue more down to the downside without even retracing to grab any inducement. And this point still okay. This is still our inducement point, and we have another pullback here. Yeah, so this is our major inducement point. You see, price continue to downside without even retracing to grab the inducement point. Now let's play price forward. Let me just fasten this. So price is retracing now, and now this is like a a counter trend in the market because we are in a downtrend, and when price is retracing like this, maybe as you all know that we need to wait for price to grab inducement before we take our trading decisions. And there's also a strategy which you can use to even trade a counter trend in the market. So this is part of the things I teach in my mentorship class. If you want to be part of my mentorship class, you see the link to my Telegram channel and to my Telegram inbox, where you can send me a message, where you can message me so that you can pay for the mentorship class, and I will add you. And this works for all time frames. So even if you are a day trader or scalper or a swing trader, you can use this. So now let's play price forward and see what happens. So as you can see, price keep on going to the upside. Let's continue price. Wow, so now too much. So now as you can see, price swept inducement here at this point, and it made the price grab liquidity from here, from this point. Price grab liquidity and failed to continue to the downside. Now maybe price want to go to our previous POI. So the first POI we have here, immediately price sweep this inducement. This is our first POI, unmitigated POI. Look here. So this point becomes our first POI. This point, this unmitigated point, as you can, because we have a value pullback here. So our value pullback before this major inducement, becomes our first POI that we have here. So this is our first POI that we'll be looking to sell from. So now let's wait for a confirmation. Let's see if we are going to sell from this point. So we see price retracing from this point. If you use the momentum candle entry strategy here, so you are likely to be trapped, because there is more to this entry strategy which I teach in my mentorship class. So if you want to be part of it, make sure you see the link to my Telegram channel and to my Telegram inbox, where you're going to send me a DM in the description of this video. And you can also follow me on Instagram, ASIWAJUFX. That's my username on Instagram. So now let's say we use the momentum shift strategy to enter at this point. We're probably going to be the liquidity here at this point, because see what price did at this point. As you can see, price went down a little bit, and what happened is price went up, grab all the liquidity sitting here. You can see this spike, this huge spike in the market. So this happens where there's large volume, because most people will start selling, most retail traders start selling at this point. So now, and if you don't wait for the advanced S3 strategy, which I shares in my mentorship class, if you don't wait for that confirmations, you will likely be the liquidity. So this is the reason why you need to grab the course. I have a course and I also have a mentorship class. So if you're willing to pay for the mentorship class, you're welcome. The class is open. And if you want to buy the course, I've explained everything on how to analyze and even how to execute the trade. Yes, then I've shared my entry strategy. Everything is there so that you won't be trapped in the market. So now let's play price for there. As you can see at this point, price just pull back here to grab this low we have here. So immediately price trick people from this point to sell here, and also price grab this low and went up to grab liquidity from this point as well, because people will start selling at this point. As you can see, they grab all the liquidity here and also even keep on pushing price to the upside. Now wow, so price going up to the upside and even get to this POI, and price failed. And remember, we have no major level here. So if price break this level, so this is when we can say we have a change of character in the market. So because as you can see, this level is still protected, it's not yet broken. So if price break this point, then we can say we have a chalk in the market. Now let's see what happened. So we are still in downtrend. Price has not even breaking out any of our major levels in the market. Now let's play price forward and see what happened. Wow, so price started retracing from this point, from this major point, and even sweep this let's clear this supply level. Price swept it. So price swept this level, which is our major point in the market. As you can see, this is a sign of a liquidity grab. So this is what we call the external liquidity grab. If you watch my previous video, I explained this also in my previous video. So this is what we call the external liquidity grab. Price grab liquidity here from the external point in the market. Now, you remember I said price doesn't follow one single time frame because your 15-minute major level might be a 4-hour inducement point. So that's the reason why price doesn't follow one single time frame. Now, so immediately we have a liquidity shift here. We have momentum candles. Then you can plan to sell from this point. And make sure you put your stops maybe a little bit above this level. Then you set your target to 100% level, or you apply your Fibonacci, the Fibonacci which I said previously. Now your target will be here, 100% level. Target will be here, this point. So because price failed to change structure, this is a clear confirmation that price is ready to reverse, because price failed to change structure here. So this is a clear confirmation that price is ready to reverse. The price just went here to grab the external liquidity. As you can see, weak rejections from this point. Now let's play price forward. As you can see, your stop might be a little bit above this point. This is the momentum shift strategy. So we have the advanced entry strategy for this kind of situation in the market. So you won't be, because even at this point price might retrace again to grab liquidity here before dropping. So this is the reason why I'm saying you need to grab the mentorship, so you understand when and how to enter the market, where to put your stops, and how to enter the market, the confirmation, so you can understand the confirmation strategy which I use to enter the trade. Now you see price went back up again to sweep liquidity from this point, because the early sellers will put their stops above this point. And you see what happened again. Price went up to grab liquidity one more time. See, the early sellers has been taken out. Price went up one more time to grab liquidity here, as you can see. So now let's play price forward and let's see what happens next. Wow, now you see price retrace from this point. Now as you can see, after price grabbed liquidity, took out the early sellers here, those who started selling here. So immediately price took out the early sellers here. You see what happened. Price retrace and start selling, and price starts pushing to the downside. Now let's see what happened. As you can see, price continue, and you can see even price went up again. So this is the reason why I said there is more to this entry strategy, momentum shift entry strategy. If you focus on that, most times in the market your stop loss is going to be it. So this is the reason why the advanced entry strategy is very, very important. You need to know. So now let's continue playing price forward. Now remember, in the course I'm not only sharing my entry strategy, I'm sharing everything you need to know. How I analyze the market. You will see how I analyze the market, starting from the higher time frames down to the lower time frames. You see how I analyze the market, and you see even the times I trade, the times I stay out of the market. You see everything, how to spot all this inducement, because we have different kind of inducement in the market. This is not the only kind of inducement. We have various kind of inducement in the market. So I shared everything down in details, and even how you can execute, where to put your stops, where to put your TP, how to break even, and even lots more. So now let's play price forward more to the downside and let's see what happens. See, our TP is not yet being hit, and even at this point there are more entry opportunity even at this drop here. But I don't want this video to be too long, so let me just play price forward. Wow, so you see price later and finally hit our TP, as you can see. So price finally hit our TP. So that's all in today's video. So if you want more of this information, if you want more informative content like this, make sure you hit the subscribe button, subscribe to my YouTube channel, and make sure you turn on the notification icon so you'll be among the first sort of people to be notified each time I drop useful content like this. And also as well, you can follow me on Instagram at ASIWAJUFX, and make sure to be the part of the winning team, hit me up on Telegram. The link to my Telegram inbox is in the description of this video. Hit me up to either grab the course which I already made, the origin of trading, to grab the course, or to join my mentorship class, where I share the SMC insights, market analysis, and my trading strategy. So to watch the next episode of this video, you see at the top right corner of your screen, you see the video title there. Click it to watch the next episode of this video. So until the next, peace out.